Dividend growth is a key component of dividend investing that allows the compounding effect to take place. All dividend investors need to be aware of companies that are committed to increasing their dividends. So in this video, we're going to be reviewing 3 stocks that just announced dividend increases. And the first one I want to look at is Procter and Gamble, and they just recently raised their dividend by about 3%, which means they're paying out around 94 cents every single quarter. Now, the current dividend yield for this company is sitting at about 2.5%. So my initial reaction to this is 3% seems a little low. If you are going to invest into companies that have lower dividend yields, typically you want to see higher dividend growth. So if we jump over to the dividend tab here on Seeking Alpha and look at the dividend history, you can see they have been paying dividends for 66 consecutive years. So a lot of the times when you see that, a lot of those companies will typically trade at premiums, which seems to be the case for Procter and Gamble. But let's go ahead and jump into my stock valuation spreadsheet and we'll do a quick analysis. Like always, if you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. We'll go ahead and come up here and plug in PG and hit enter, and you can see all this data will automatically load in. Now, the current payout ratio for this company is sitting at about 61.5%. So it is a little bit higher than I typically like to see, but for a company that's been increasing dividends for 66 consecutive years, it's really not too much of a concern. But let's go ahead and jump into our first valuations. And I think for a company like Procter and Gamble, really the only 2 valuations that I feel comfortable doing are going to be our discounted cash flow analysis and the dividend discount model. So let's go ahead and jump over to our DCF model and we'll go ahead and zoom in. And you can see I plugged in the historical free cash flow for this company so we can see our year-over-year growth rates. And we have an average growth rate of about 7.14%. So staying consistent with that, I'm projecting a growth rate of 7.75% to the future free cash flows after adding the cash and subtracting out our total debt and always dividing by our shares outstanding. I came to a discounted cash flow price per share of $137.13. Now, jumping over to our dividend discount model, you can see again our most recent dividend increase actually was around 3.03%, but over the past few years they've had dividend growth of around 6%, 10%, and 5%. So that's an average growth rate of around 6%. So moving forward, I'm projecting dividend growth of 4%, discount rate of 8%, and that gives us a dividend discount model price per share of $97.83 per share. So pretty decent historical dividend growth, a little bit lower as of this most recent increase. I want to see it higher than that, and I think they do have the ability to do that due to their payout ratio and growing free cash flow. So when we jump over to our output tab, we have our 2 valuations, dividend discount model and discounted cash flow, and that gives us an intrinsic value of about $117.50 per share. Now keep in mind, again, I do think this is a company that trades at a premium, but even with that being said, I don't really feel comfortable adding at its current price. Let's say we were to add a 10% margin of safety, you'd be able to buy in at around $105 per share. Over the past year, we can see this company has traded as low as around $122 per share, but overall, definitely not my buy range. But let's go ahead and move forward and look at the next company that just had a dividend increase, and that is Qualcomm, stock ticker QCOM. They have increased their dividend from 75 cents per share per quarter to 80 cents per share. Jumping over to Seeking Alpha, we can see this company is currently trading at $121.29 per share, and like Procter and Gamble, their current dividend yield sitting at about 2.66%. Now, if we jump over to my valuation spreadsheet real quick, I'll go ahead and zoom in and we'll look at the dividend discount model, and we can see that most recent dividend increase was about 6.67%. So that is a pretty decent dividend increase. We'll go ahead and jump over to Graham's valuation and look at this. After plugging in all of our variables into this formula right here, you can see we came to an intrinsic value of $93.96 per share. Jumping over and looking at our discounted cash flow analysis, again, I performed the same method as we saw with Procter and Gamble, free cash flow growth rate of about 3%. This gives us a discounted cash flow price per share of $104.25. Now, looking at our multiples valuation, this is where things start to get pretty interesting because we have a lot of great comparables for QCOM. You can see we're taking companies like Micron, Intel, Texas Instruments, and one of my favorite chip companies, Broadcom. We're taking their stock price, dividing by the earnings per share to get that price to earnings multiple. We take the average price to earnings multiple and multiply it by QCOM earnings per share, and we come to an intrinsic value of $176.27. Now again, jumping over to our dividend discount model, the last valuation we'll look at we can see dividend growth rates year over year of close to 5%, 4.6, a little over 10, and the most recent 6.67%. That's an average growth rate of 6.6. So moving forward, I'm projecting a dividend growth rate of 5.5, discount rate of 8%, and that gives us a dividend discount model price per share of $135.04. And if we jump back over to our stock screener, we can see this company has a nice low payout ratio of just 27.9%. So they definitely have a lot of room to continue increasing that dividend over time with pretty decent free cash flow growth, as we can see right here. So jumping over to our output tab, we can see our 4 valuations. And according to this, it looks like the intrinsic value is slightly higher than that current trading price, but with a 10% margin of safety, our acceptable buy price is around $114 per share. Jumping back over to Seeking Alpha, we can see within the last year, they have traded as low as $101.93 per share. But let's go ahead and look at our last company that just recently announced a dividend increase, and that is going to be FedEx. And this company actually increased their dividend by about 10%, so that's a really nice dividend increase. You can see it's going to be $1.26 per share quarterly, which is an increase of 9.6%, coming from $1.15 per share. Now, FedEx's current dividend yield is sitting at about 2.2%, and we can see over the past 6 months, they've had a pretty nice run up in their share price, and over the past year, they're up about 13%. So let's go ahead and jump over to my valuation spreadsheet. Again, we can see payout ratio for FedEx sitting at around 36%. So nice low payout ratio for them. We'll go ahead and look at Graham's valuation, and I'll zoom in. And you can see once we plug in all of these variables, we come to an intrinsic value of $199.40. Now, looking at our discounted cash flow analysis, you can see the free cash flow for this company has been jumping all over the place over the past few years. But moving forward, I am projecting a free cash flow growth rate of 8%. That may be a little bit aggressive, but I do think a lot of analysts do have their estimates within that range. So I projected that to the future free cash flows like always, added the company's cash and cash equivalents, subtracted the total debt to get the equity value, and divided by shares outstanding. And again, we came to a discounted cash flow price per share, pretty close to what we got with Graham's, but $210 per share. Now, jumping over to our multiples valuation, this is really interesting because a lot of companies within their sector have a fairly high price to earnings multiple, as you can see right here. So the average price to earnings multiple for these comparable companies is sitting at 21.62. So when you multiply that by FedEx's earnings per share, we actually come to an intrinsic value of close to $297 per share, quite a bit higher than those other two valuations. Now, looking at our last valuation model, we are going to look at the dividend discount model. And again, you can see our most recent dividend increase right here. But historically speaking, their dividend increases have bounced around quite a bit. We can see there is no dividend increase here. Good dividend increase here at 15.38. And they also had a dividend increase of 53.33%. So that was a major increase about a year ago. And the current dividend increase 9.57, which is $1.26 per share per quarter. So that's an average growth rate of close to 20%. Obviously, it won't be that high moving forward, but they do have a low payout ratio, which will allow them for pretty good dividend growth along with solid free cash flow growth. So I'm projecting a dividend growth rate of 5.5, discount rate of 8%, and again, we come to a dividend discount model price per share of $212. So when we jump over to our output tab, we can see our 4 valuations, and we come to an intrinsic value of $229.92 per share, pretty close to that current price. So it looks like it is trading at about fair value. Let's say we applied a 10% margin of safety. Our acceptable buy price for this company would be around $206.92. So when we jump over to Seeking Alpha, we can see within the last year, this company has traded as low as $141.92 per share. So there has definitely been opportunities within that acceptable buy range. So there's 3 companies that just recently announced dividend increases, but I want to mention one more bonus stock, and that is AT&T. And this is not actually a company that has increased their dividends. And I think that's interesting for a few different reasons. If we jump over to Seeking Alpha and look at their dividend history, if you've been keeping up with the company, you know they recently had a dividend cut. Now, this is really important because if you see right here, they had 4 consecutive quarters where they paid 28 cents per share per quarter. And I was interested to see what management's approach would be to increasing dividends. And we can see with this most recent dividend announcement, it's going to continue to be 28 cents for the foreseeable future, which means they're not really committed to increasing their dividend payouts at this time. Now, this company does have a pretty high starting dividend yield at around 5.61%. So a nice starting dividend yield, but it is important to keep in mind right now they are not increasing dividends. So I just wanted to quickly point that out But there you go. There's a quick analysis on 3 companies that increased dividends as well as AT&T. If you'd like to be able to download my spreadsheets, you can head over to my Patreon page at the link in the description. Seeking Alpha is also still running a 58% off sale at my link in the description, so be sure to check that out. But with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.